Okay, so it's Unit 4, we're doing finance and we're doing the medium-term sources of finance. There's 3 that's covered for you to do. You have leasing, hire purchase and a medium-term loan. Leasing is just another name for renting an asset, so you've decided that it's cheaper for you to lease rather than rent. Now, if I was leasing, rent would be included as my expenses. So it will be taken away from my gross profit to get my net profit, which means it's tax deductible. The rent will be tax deductible. Hire purchase, you give an initial deposit, you make regular payments, and you only own the asset on the last payment. Again, you will have to pay quite high interest using hire purchase, but remember, interest is tax deductible. Medium term loan, it's where you'll make regular payments. Usually the amount can be the same. You make it on, you will repay the amount that you borrowed plus the interest. Now again, this could be in your ABQ. More than likely, if you have to talk about sources of finance, medium-term sources of finance, you'll have to talk about the 3. And just in the last video, I probably should have mentioned this as well. In the ABQ, if they ask you to talk about sources of finance, it means that you must mention short, medium and long. If you mention 3 short and it said sources of finance, you're only going to get 1/3 of the marks. You must, so again, it has to be a short, a medium and a long to get full marks. So you can compare these under the same 5 headings always, okay? Now none of these, again, generally you won't need security and you won't lose control of your business with any of them. They all have repayments. Well, the renting is a payment that you're going to pay every month or every week. Hire purchase has payments, and obviously the bank loan has payments. Cost, well, the cost of renting is the rent that you pay. The cost of hire purchase is the interest that you're going to pay on the overall package. The cost of the loan is obviously the interest as well, which remember is the APR. Just going to put the interest. And again, the APR is the annual percentage rate. Tax implications, all 3 of these are good. They're all, so the 3 of them, yes. Yes for cost. All interest is tax deductible, and yes, they all have to be repaid. So again, doing it doesn't matter whether it's short, medium or long-term source of finance. Once you know the 5 of these headings, you can apply them as advantages and disadvantages of each one of them. Can you make sure as well, go back on your notes. In your notes I have a slide on each one of these, and on the slide it gives you the advantages and disadvantages.